What is happening with interest rates in 2026? Are they coming up? Are they going down? Are they staying as they are? Well, I'm going to tell you my predictions and what the research says at the moment. I'm Diana Hamad, finance broker and enthusiast. I've helped my clients over the last 10 years of being in the industry. Now let's get into it. In 2022 and 2023, inflation rose globally. Now, particularly in Australia, inflation hit the roof, and the reason was it was effectively a government response, or the RBA's response to what the government did during COVID-19. During COVID-19, the government used and borrowed an immense amount of future taxpayers' money. So it wasn't money that was already circulating. It was money that hasn't been circulated or hadn't been circulated yet. And they used that money in response to COVID-19, which was fine to begin with. They had to do what they had to do. But the problem began and arose when they started to use too much money and the situation got out of control. At the same time, immigration went through the roof and housing, energy, food and services were already constrained. So inflation skyrocketed. Now, why did the RBA raise rates in response to this? How is that going to help anything? Things were already so expensive. What the RBA's job is to do is to control and help control the money within the economy. So effectively, what they wanted to achieve in increasing the interest rates is to take money back out of the economy and to slow people down from spending. So yes, unfortunately, because of the government spending, it's the consumer who suffers, okay, because we're the ones who are going to have to pay it back in the future. Firstly, it's our taxpayers' money. And secondly, now we're the ones suffering with the rate hike. So in response to fiscal policy, which is what the government used to spend in response to COVID, monetary policy, which is the RBA, they've increased the cash rate and they've increased interest rates in order to slow down the economy, to slow down spending, to reduce price of housing. So they lifted interest rates to reduce borrowing capacity and to try and slow down the economy. So whilst the government was injecting cash into the economy, trying to speed it all up, the RBA was trying to hit the brakes and take money back out of the economy, and the two policies, so fiscal, monetary policies, were working against each other. Now, Chris Joy puts this very well, and he speaks a lot about the two policies working against themselves, because effectively they are. The government's putting money in, the RBA is trying to take money out. And that's why inflation is taking so long to slow down. It hasn't slowed down since they hiked the rates, okay? And now they slowed down the rates in 2025, but now in response to slowing down the rates, they're increasing them back up again because the government hasn't taken a good handle on inflation. The first rate increase we saw was in November 2022, and I'm sure you all remember it very well. It was a shock after those historically low rates we had experienced for a few years there. First rate increase was in November 2022, and it absolutely peaked until the cash rate hit 4.35% in November of 2024. The rate stayed high throughout 2024 and then started to reduce in 2025, hitting 3.6% in August last year. Now, the RBA's cash rate target is 3%. In order to get to a cash rate target of 3%, they want to see inflation between 2 to 3% as well. It's important to understand the rate of inflation because future rate hikes are heavily dependent on what the inflation rate does. As the inflation rate increases, the interest rates are also going to increase, like I explained, so that the RBA can help control the economy and slow it all down. As inflation rate reduces, as we saw last year, the interest rates will also reduce in response to this to help stimulate market growth and the economy movement. As I mentioned, we started to see rate relief in 2025, but now they're talking about either A, there are two parties in 2026. One party is saying that the rates will remain unchanged as they are, and the second party is saying that we're going to see two rate rises. Now, the head economists of CBA and NAB see two potential rate rises of 0.25 basis points happening in the discussion in February and possibly May. The other two majors, ANZ and Westpac, thinks that the rates will remain unchanged. From my perspective, I'm already seeing lenders increasing fixed interest rates, which is a major indication that they believe the RBA is going to increase the rates. Now, let's say if this does happen and rates do increase by 0.25 basis points, what does that look like on your home loan and what does it look like for your borrowing capacity? As a rule of thumb, for every 0.25 basis points, $1 million of lending, it'll increase your monthly repayments by $150. So if you have $2 million in lending, then your monthly repayments will increase by $300 and so on and so forth. With borrowing capacity, we have the 0.25 basis points increase to interest rates, plus banks already have a buffer that they add on to the current interest rate, okay? So then we'll have the buffer plus the rate increase. You're looking at a decline in borrowing capacity of about $25,000 to $40,000. Now, what's my rate prediction for 2026? I think the rates will remain unchanged, and if we are to see an increase, it would be in the May RBA release or May-June RBA review. And the reason is because I think the government wants to see the response to inflation after a whole Christmas and New Year's period we've had. Naturally, there's going to be more spending. I think the government or the RBA is going to want to see the consumers' response to getting into the normal year. And once we're into our regular year, if inflation is still spiked and increased, then they may consider increasing them in May to June. Now, after that increase, if it occurs by 0.25 basis points, I think we should see a steady rest of 2026. What do you think? Do you think the rates are going to go up? Comment below, like, subscribe, and I hope this video helped you.